Good morning, everybody. February the 10th, 2016. Time to kick off another trading day. We came into the market yesterday afternoon wanting to sell London overnight. We thought because of the 10-year, the intermediate auction, that the market would find sellers as they took prices lower to increase interest in that particular piece of paper. The 3-year auction was pretty weak yesterday, and some supposition or commentary says interest rates are too low to have much interest in this week's auction. We'll see. The surprise as far as strength goes, if we're going to have it, usually comes on the intermediate term. Normally, the 3-year and 2-year are up, 5-year and 10-year are down, and the 7 and 30-year are higher. So we'll see how that plays out. So we're going to have support starting right here at 28. We've got this B period low at 25. We've got this high right here at 21, 22. We've got this high over here at 24. So the first buy is going to be 29 to 25. Buy one. Come a long way in the overnight session. And if Yellen says interest rates are on hold and going to go up, treasuries don't believe her because this market has rallied ever since they have raised interest rates. If she says interest rates are going to go down, possibly QE4, this market will rally. So Janet Yellen's testimony is most likely supportive for both stocks and treasuries. And we've seen this last year coming out of summer and early fall, when the Fed would say we can't raise interest rates, both bonds and equities would rally. When they said, well, yeah, we can raise interest rate, both bonds and equities would sell. So we're in a similar situation. Resistance begins at 4. So 3 to 7 will be sell 1. 11 to 15 will be sell 2. So at some point today, I think treasuries will make a comeback because they have to move the 10-year paper. Okay, biggest news out overnight was industrial production was off across the board in Europe, including the collective EU number. So usually Germany has been the anomaly. The industrial production would be off in all countries except for Germany's, and then the EU would come in unchanged and Germany's would be higher. But Germany's been feeling the pinch too, which will give Mario Draghi more reason to talk the euro down so they can sell goodies outside of the European Union. Okay, we're at 11 right now. Resistance starts at 16, ends at 23. So pretty aggressive. 15 to 19 sell 1 on the idea will be a little bit lower than 27.31 sell 2. Pick up these single prints. We've got these single prints down here. So 1 to 5 buy 1. And then 21.25 buy 2. I think we will be a little lower off the opening. The inverse relationship between equities and treasuries worked overnight, did take us lower, but again they have to move 10-year paper and they can't do it when the market is going straight down. Now, and again, if Yellen comes out and says, hell yes, we're raising interest rates and we're going to do it again in March, just like we said we were going to do, and I don't see it, with Bullard out there talking about perhaps we made a mistake, don't see how she can make a statement that hawkish or that strong, but can't guarantee it. So I do like at some point buying treasuries today. Okay, gold is off. We like the sell side yesterday. We were hoping to sell 94s to 96s. And in Asia, we just touched 94. We like the short side. We thought that we would trade lower and our first buy was 85.87, which did give us some support in London. You can see it right here, but it didn't hold for long. Bounced the market, so here we are. So again, I don't think the bottom falls out of the market, so buy one will be 80.82, 75.77, buy two. The spill was from 87, so 88.90, sell one. 93.95, sell two. And we'll see how that plays today. Poor Mario in the European Union. Still haven't figured out what to do to keep the euro headed lower. It's funny, I've been watching Lilyhammer on Netflix. I'm just 4 episodes into it, and it's about Norway, which may not be a good example of European thinking, but you know, it's the model. Everybody wants to be like Sweden as far as the Democrat Party goes. That's the ideal society, etc. And it's pretty funny to watch the foibles and the customs and how they look at things and how passive the population is. The continent's in trouble. I mean, they've created an animal out there that really doesn't have a lot of drive to better their situation. They're pretty content, and if it's like it's shown in Lilyhammer, nobody has to bust their chops. They've got as drones, they live a pretty comfortable life. So for Europe to get back into the fray and to really turn their economic engine on, they've got to cut back on their social programs. They've got to cut back on all the rules and regulations, and they've got to lower their currency so they can export outside of the European Union. But every time Draghi does something, it works shortly for a bit, and then it turns around and bites him. The market trades back up. I think when China comes back to the market next week, things will change a little bit. Okay, buy one, 12.50, buy two, 12.25. Sell one, 29. Sell two. How about 113 even? And 13.25. Yeah, there's a lot of articles out about that. Norway may have to, just like Alaska, cut payments to the general population. Would make sense. Kind of find themselves in the same situation that Russia and Saudi Arabia and all these other countries do. Nigeria, Venezuela, Ecuador. Another country. I want to say Azerbaijan have all applied to the World Bank for loans so they can keep their social programs going. You get to a point where you just run out of money, and right now the judges in the United States have been split on whether a municipality, whatever the entity happens to be, has to maintain their pension plans as promised. And I believe Detroit has settled for 60 cents on the dollar. I believe there was a Rhode Island entity, and I forget if it was a city or a county, that settled for less than 50 cents on the dollar on their pension plans. And the fact of the matter is there's just no money, and they can't tax or get any more money. Okay, crude. We've got this spill from 29.50. So 29 and a quarter is a pretty good resistance. Can we get through 75? So 28.75, 29. Sell one. Maybe a little short covering in front of the APIs. I mean the EIAs tonight. The 29 and a quarter, 29.50. Sell two. On the buy side, 28 and a quarter. And then 27.50, 27.75. And if we take out 27.50, we're headed to 25 bucks. Easy for me to say, right? I sure hope that's not the case. Lost a lot of high-paying jobs. White collar too. Okay, to the E-mini. So let's go take a look at our F1 screen. And you can see that we've got this 80 area, 75 to 80 area. We've gotten through that low right there, so 75 to 80, and we've got all this volume at 90. So 75 to 80 is going to be our first little resistance band, and I doubt if Yellen says anything to hurt equity prices. You know, if they can point to the stock market, well, you know, good times are just around the corner. Look at the stock market. That's where they're coming from. So if we put all of this together, go do a split on the letter N. Why the letter N? It's the longest line of letters. It is a move out of the middle. So we've got resistance right here, basically at 75, and getting stops above the overnight session high would make sense. So 74, 79, sell one, and we're going to jump it up to 84, 89 for sell two. Pick up this high volume area right here. The breakout right here in the 63, 65 area. So 60, 65 is going to be buy one. And then 50, 55 is going to be buy two. And again, I don't think Yellen says anything that will hurt the stock market. Well, we're going to raise taxes on crude oil because prices are down right now. Gasoline prices are down right now, and nobody will feel the increased taxes right now. It's just the same old horse crap that the government pulls all the time. We are not going to cut our budgets. We're not going to decrease spending. We're going to grow our budgets by 2 to 3% every year. And we're immune from economic reality. And if that doesn't work, we're going to borrow more money. So at some time, it just comes to the point where they don't have any more money. Yeah, I would say that part of today's, I mean, there was a Market Watch article that said that the stock markets are telling us that the Republicans are going to win the White House. So whether that's true or not, but that's certainly part of the rally too. Okay, that's all I have. It's going to take a bit to get everything up and posted. Rich will be on at 12 Eastern today, and I'll be back with you as soon as possible.